Hello, this is Joe Pryor, the virtual real estate team in Oklahoma, and we deal with investment real estate residentially in both the Oklahoma City and the Tulsa, Oklahoma markets. I just did a video talking about checking on your evictions. What is the policy of the state? But I want to expand this on a little greater because, I start seeing these articles all over the place. It could be in a big magazine or newspaper like the New York Times, the LA Times, Wall Street Journal, or it may come from various sources. Oh, this is the place to invest. This is really cool. And I've seen this happen before. I saw it happen to Phoenix, got massively oversaturated before 2008. I've seen it happen to Austin. I've seen it happen to other cities. It's the above radar thing. And all of a sudden everybody says, well, they've got authority. I must go there. All right. Well, I just saw one that just said Oakland is a place to invest. Well, I like Oakland. I like San Francisco. I've been there. I've enjoyed myself there, but I just commented on the eviction rules and I'm going, oops. California and New York, for instance, just to name two, and I think New Jersey, have a real favorable policy to tenants, not the landlords. All right. And I'm going, why would they say this? And also affordability. All right. I'm going to buy a $600,000 or $800,000 investment property in Oakland. Excuse me. Well, let me put it this way. If you buy that $6,000 or $8,000, and again, no offense to Oakland, but if you have one, if you're using all that money to buy one thing, and I don't understand why this was recommended, then you've got a 100% vacancy rate. Well, what about buying 3 properties somewhere else on an affordable market so that if you have 1 vacancy and 2 are rented, you now have down to a 33%. If you have 5 properties, right, you're down to a 20% vacancy rate. You have 10 properties, it gets even better. And this is the whole point. It's like potato chips. You can't just eat one. If you're investment real estate, you can't just buy one. And so I'm always interested in seeing who's paying for this. That's what I wonder. Now, don't get me wrong. Sometimes Oklahoma City or Tulsa appears on this list. And you want to know something? You think I'm happy? No, I'm not happy at all. I want Oklahoma City and Tulsa to stay below the radar because what happens is there is absolute a stampede when these articles come out, and supply and demand in real estate is everything. If you have too much supply, you have a bad market. Now, I have reasons why Oklahoma City and Tulsa are great places to invest. First of all, they're growing incredibly in the top 10 in the United States. They have 2 of the lowest unemployment rates. They have the 4th best affordability factor in the United States. I can go on and on. But I'd rather talk to you about that than other people. Now, you may think this is good for me. You may think, hey, Joe Pryor thinks that we should have as many articles about how great Oklahoma City and Tulsa is. Wrong. The reason why is I've had people for the last 20 years from out of state still buying from me. I just had a Zoom meeting with somebody that's buying more properties that bought in 2005. This is what we want. Also, supply and demand is everything. It's a capitalistic principle that's an absolute. Too much supply, vacancy goes up, rents go down. I'm out of business. I've got to act responsibly. So I want Oklahoma City and Tulsa to stay below the radar. I want to make sure that with our property managers, we obey the law of supply and demand. I don't want to be in any articles. We ain't paying for nothing, but call me or email me, and we'll talk about the advantages of the Oklahoma City and Tulsa market for you and how you can build wealth investing in markets like us.